Castrol India is the next one which is on our radar. I can say it was perhaps operationally a bit subdued. This, of course, follow the calendar year. Margins contracted a little bit. Profits actually declined. Management said that there was some softness in consumer demand as such. Mr. Sandeep Sangwan is Managing Director of the company. He is joining us right now to take some questions. Mr. Sangwan, good morning. Good to have you with us here. Prashant this side. Could you characterize that softness that you alluded to in consumer demand? How do you see that? Do you sort of see? Let's talk numbers. What was volume growth for you in Q1? Last year volume growth was about 4% for the full year. What are you expecting for the full year 2024? Go on, sir.
So, morning, Prashant. First of all, thanks for having me on your channel. And I think the start to the quarter was a bit slow in Jan, but I think things have picked up in Feb and March. So if I look at the quarter, we're pretty confident of the results in terms of the volume growth was about 6%, 5-6%. And we introduced portfolios in the lower end of product range, which is giving us good volume growth. I think the revenue was up 2%, primarily due to a bit of a mix, but we were able to hold our margins at 22%, EBITDA margins. That's what we've been saying, that we'll operate in a range of about 22 to 25%. But I think in addition to that, we're laying strong foundation. Last quarter, we announced our brand ambassadorship with Shah Rukh Khan, who's the ultimate in terms of excellence, performance excellence. We also announced our tie-ups with Mumbai Indians and on the performance side with KTM Cup. We've been doing a lot of activity on CVO, which is Pragati Ki Pathshala, where we've kind of interacted with about 10,000 truck drivers in the first quarter. And we continue extending our reach into rural India. We reach about 33,500 outlets now, and also in multi-brand workshops. So I think I'm confident of the growth coming through. We saw volume growth coming in Q1. And we're also investing behind our brands, so all to play for.
So for the full year, you'd be in this 5 to 6% range, volume growth?
So our view is that the category would grow at about 5 odd %. And I think we want to be, as we've said, we want to be ahead of category growth by a few points. So as I said, all to play for, the category is growing. The softness I spoke about was primarily coming from the agri sector, where we saw a bit of slowdown.
Okay.
Two-wheelers are doing well, passenger cars are doing well, and even on commercial vehicles, the specialities range is doing fine, sir.
Okay. All right. Hi, Sandeep. Good morning and good to see you. And, so the industry grows at 5%. Will you grow at around 1.5 times what the industry is growing? 1.4, 1.5 times?
I can only talk about aspiration. What will we grow at?
So what do you aspire to grow by?
Yeah, we aspire to grow by, as I said, a few points above the industry.
Okay. Got it. You put in some promotional efforts as well, but still this top line growth is only around 2%. Is it an aspiration that your revenue as well could grow in double digits at some point of time?
Yeah, I think we are, as you would know, historically, Castrol's volume growth has been about 2%, 1 to 2%. We're trying to change that trajectory, okay? And yes, as we change that trajectory, we're also learning to play the mixed game, both at the top and at the bottom end, while protecting our margins. So I think there'll be a bit of balancing in the portfolio, but hopefully in another few quarters, I think we'll get it the mix right, and push for similar kind of margin growth as we introduce new products on top end of the range. So we have exciting launches planned in the second half. In passenger car segment, we are upgrading the technical specifications on our two-wheeler product portfolio. So a lot to look for.
Okay, so at some point of time in this year itself, maybe the revenue growth as well could be in double digits?
I wouldn't say double digits because the category grows in mid-single digits. Okay. So that's what you need to...
Since you're emphasizing, Sandeep, about that you'll outgrow the industry, you could have gained some market share, right? So you want to put a number to that? What is your market share? Where do you see it going?
So our market share, as reported in the retail automotive aftermarket by Nielsen, that is what we measure, is about 21%. And I think it's been at that level. We've gained in a few segments, and we've seen a few basis points drop in one of the segments. So overall, we're still holding at about 21%. Okay. As we progress, we'll see how it pans out.
I mean, India is one of the few parts, important large markets in the world where there is still, according to many reports, visibility for the next 10, 15 years, right? Maybe more, till electrification, etc., takes hold in a big way. But at the margin is competition also, because India is one of the few markets with that potential. And I think I've asked you this before as well. Lots of new, not newer players, but a lot of focus. Large players in the lubes market outside focusing here in a big way, pushing through. Is that hurting at the margin, would you say?
Prashant, I think you need to look at it two ways. So first of all, as you rightly said, India is going to be the last man standing as far as the lubricants category is concerned, given the long runway we have. And our projections show similar to what you said. I think the competitive intensity will increase. But please keep in mind, at the same time, as the technology improves, consumers and vehicles demand better and better products. And that gives the margin upside as we introduce new technology products, and the market will evolve. So I think that will balance out some of the margin questions that you're asking. The competitive intensity, we are very comfortable dealing with that. We've seen a lot of competitive intensity. It will increase, but I think in the end, it will be good for customers and consumers to get better quality products at the right value.
Okay. All right. You also launched Castrol EV fluids. What has been the response out there? What is the revenue contribution? And obviously, it will be growing from year on. So what's the target, say, in the next 2-3 years?
So I think we'll see if you look at the EV sales, primarily on passenger cars, they're growing at a quite good clip. But the volumes are still very, very small. Okay, we talk hundreds of thousands of liters. So it's not kind of selling EV fluids in million. But we supply to two of the biggest OEMs who manufacture EV vehicles in India in the car segment. Okay, good relationship with both the OEMs. So we'll see that business scale up. But I think it'll take another 5-6 years before it becomes of any material scale.
Okay. In the annual report, you also mentioned that data centers could be a big opportunity. You want to throw some light on that?
Yeah, so absolutely. We've called out globally, Castrol has called out data center thermal management is one of the places where we want to participate. And in fact, we've set up a R&D center in UK, which is our global headquarters, where Castrol BP is investing about 50 million pounds in that facility. We have proof of concepts, and we're working with some of the data center players now in terms of bringing that technology to commercial use from a proof of concept perspective, which is about immersion cooling. As data centers will become huge consumers of energy in the future, and they'll need that efficiency for processors to operate at much higher speeds and capacities.
All right, we'll leave it there. Mr. Sangwan, great to have you with us here. Thanks very much for joining us, and it's a pleasure speaking with you.